Consumer inflation was seen coming in line with expectations, ticking up to 5% year-on-year for the month of August. That's from 4.9% the previous month. Growth in retail sales is slowing to 4.2% year-on-year for the month of July. That's compared with a revised 8.6% for the month of June. For more on this, Etienne le Roux, Chief Economist at Rand Merchant Bank, joining us at the desk. Etienne, thank you for joining us today.
Good evening.
Okay, so let's start off with the retail sales numbers. A slowdown in consumer spending, is that what we're seeing?
I think so. The year-on-year rate is certainly suggesting that. Month-on-month as well, we saw no growth in July. But should we be giving up on the consumer? Not at all. 4% growth year-on-year is still decent in my book. Not as good as 6 or 12 months ago, but still decent. And I think, once again, if you look forward, it is probably a trend of slower growth, but still relatively okay. Remember, yesterday, data was quite important, in my opinion. We saw earnings from employees growing at between 8 and 9% year on year. With inflation of 5%, that's still decent real gains. And ultimately, that is what drives consumer spending.
Etienne, what do you make of the retail sales data in terms of the volatility of the data?
Absolutely, yeah.
You know, so that we go in from one month where we have growth rates of over 8% real to another month of 4%. And we've had this type of fluctuation for some time. And initially, you interpret it as a carryover from the World Cup, that you see this base effect. But at this stage, how are you viewing that? Because I think what it's doing is it's giving us this euphoria where we think everything's growing at 8%, then we think, you know, the way the number gets reported today, or it's fallen off dramatically. It's
red flag.
Exactly. Look, I mean, it's even worse month on month, given. I mean, just go back in May, month on month, the index fell by 1%. Then it rose by 2.5%, only to show no growth in the July number. So it is extremely volatile, very difficult to predict. I think what one should do is look at seasonally adjusted data and look at what the data is doing on a quarter-on-quarter basis. So even on that measure, it is showing slower growth, but not a train smash, but indeed slower growth.
And that's in line with the SARB's views.
Yeah, and which are the areas that are slowing down?
Well, it's interesting if you look at today's data year on year. We've seen negative growth in two categories, food and beverages, one, and then also paint and hardware and building related stuff. I think there's probably a price effect there, particularly in the food category. Select food items are certainly getting more expensive. And I think when it comes to paint and other related items, it's probably related to the oil price. So there's definitely that effect. I think when you think about the consumer, you think about the SARB, you raised that particular issue, I think it is pretty much consistent with the central bank's own view of slower but still decent growth in consumer spending, not only on the retail level but in aggregate as well.
Etienne, how much of the unsecured credit do you think is reflecting in our retail space?
Well, it's definitely boosting retail sales, no doubt. But I think, once again, Kevin, the more important thing for me is what happens to income growth, and that's still decent in real terms. So for me, that's the important factor. But the fact that interest rates are low and that unsecured credit is growing at very high rates or strong rates, that's certainly facilitating consumer spending at the retail level. There's no doubt about that. Okay, but whether it is the key driver of it, I don't think so.
Before we get into the inflation numbers, going to go around the desk, cut or no cut?
No, I think rates on hold. I mean, I thought the cut last time was kind of an insurance policy in case Europe really got worse. Remember, at the time when they made that decision, the discussion around Europe was a lot more severe than it is now. I think there's a bit of concern about food and fuel inflation, a bit of concern about credit. I think flat.
Well, I'm between two economists and I'm just a humble portfolio manager, but I'll go short. I think it'll be on hold.
So we won't call you back in here to answer for that if you. And also on your side, flat. Okay, so hold all round. Let's take a look at the inflation number. 5%, a slight tick up. Peter Todd Montalto from Nomura saying he sees inflation under control right now. He's not really worried about food and fuel kind of feeding into inflation, and the rand stable, if not strength, coming through in October.
Yeah, I would agree to some extent. I don't think we should worry about inflation in the short term. Medium to longer term, there could potentially be some issues, one being food. There's very little indication in today's number that, you know, the high grain and wheat prices of a couple of months ago is in the number. That's certainly not reflecting as yet, but it's coming. There's no doubt about that. Food inflation printed 5% year on year today, and December last year it was 12%. My own expectation would be in 6 or 9 months' time it will probably be above 10%. So that's clearly a factor that we have to watch very carefully. The central bank is certainly also on top of that issue. Oil, very volatile, but much higher than what we've seen before. We've seen the petrol price responding.
Yeah.
The one thing that I do think is important is that the economy is relatively weak. So to the extent that input costs are going up, when demand is not necessarily there, it makes it very difficult for companies to pass those costs on to the consumer. So there is that limiting factor. So cost base may be going up, but it is increasingly difficult to raise your selling prices when the economy is growing at 2 or 2.5%. So in the bigger scheme of things, once again, that plays into the theme of, yes, there are potentially food issues and petrol price issues, but macroeconomically, I don't think we should be too worried about inflation running away.
Mm-hmm. We're going to have to leave it there. Thank you very much for joining us tonight. Etienne le Roux, Chief Economist at RMB.